Welcome to this channel. If this is your first time of visiting this channel, please kindly subscribe. Turn on the notification bell so when I post a new video, you'll be the first to get notified. In this video, I'll be sharing with you cryptocurrency versus fiat money. Now, what is cryptocurrency? A cryptocurrency is a form of digital assets based on a network that is distributed across a large number of computers. This decentralized structure allows them to exist outside the control of government and central authority. Now, fiat, on the other hand, is a type of currency that is issued by the government and is not backed by physical commodities such as gold. Instead, the fiat value or the fiat money value comes from the public's trust in the issuer, which is the government. Why is it called fiat currency? The fiat definition comes from a Latin word that can be translated to let it be done. That is the meaning. That word fiat. In Latin word, it means let it be done or it shall be. Fiat money only has value because the government gives it value and therefore it has more control over the currency and how much can be printed. So now you understand the two different meanings of cryptocurrency and that of fiat money. So whether it's the euro, the European money, the euro, the US dollar, or the Swiss franc, all major paper currencies have lost massive value against the top five cryptocurrencies over the past 12 months. But what is the cause of this development? To answer this question, one must first understand how the current banking system works and where the differences between paper money and cryptocurrencies lies. The differences. Cryptocurrencies versus paper money. Significant differences. Number one, the most clearly difference between cryptocurrencies and paper money is that cryptocurrencies are only available digitally while paper money exists in physical form. Second significant differences. Fiat money or paper money currencies are centralized while cryptocurrencies are decentralized. For instance, while a central authority, which is the central bank, exists and prints money in the paper money system, there is no such central authority in cryptocurrencies. There is no Bitcoin bank or anything like that. Instead, cryptocurrencies are based on the blockchain, a decentralized database in which all financial transactions that have ever been carried out are stored. With paper money or fiat money, the central bank ensures an inflationary and thus causing unlimited increase in money to supply the economic cycle with liquidity. With cryptocurrencies, the amount of money is usually limited. For example, in the case of Bitcoin, the number of digital coins is limited to 21 million Bitcoins. Hence, cryptocurrencies have a deflationary character. 3. While paper money in the banking system is transferred via account numbers, digital currencies rely on addresses and cryptography, This encrypts private data and mathematically verifies identities. Why banks create money virtually out of thin air? Money creation through lending. Cryptocurrencies are calculated, mining, or generated through staking as a proof of work and proof of stake. So now you can clearly understand the significant differences between cryptocurrencies against fiat money. So now we'll be talking about advantages advantages of cryptocurrencies over fiat or paper money. First, you understand that cryptocurrencies is a decentralized system. Why the fiat or paper money is a centralized system. It is being governed by a body. They are the one that issues the command. But in cryptocurrency is a decentralized system. So now we'll be talking about the advantages of cryptocurrencies over fiat or paper money. As a result, cryptocurrencies have several advantages. For example, banks do not create the money in the crypto universe and lend it against interest, but users, which are the miners for instance, receive money for processing payment transactions. So you see, so these are a very clear advantage that cryptocurrency have over fiat or paper money. Users can thus mine cryptocurrencies themselves, effectively becoming their own bank. In other words, you have total control of your money without being having worries of what is going to happen to your money. You have total control of your own money because you are the one that grown it. You are the one that mine it. You are the one that generates it. So as you're, for instance, if you're doing online trading like forex trading, binary trading, you you mine your money. Your money grows and you have total control of it. Is with you always. So that is a clear advantage that cryptocurrency have over fiat or paper money. Cryptocurrencies eliminate the middleman, for instance, the banks, allowing money transfers to be made directly from one person to the next. This makes it possible to transfer money across national borders in seconds and for lower fees. So cryptocurrencies automatically eliminate the middleman, which is the bank. So it can now allow this successful transaction without this centralized body. So you can actually transfer money directly from one person to the next. The transaction is made simple across national borders in seconds and for lower fees. Through cryptography, digital currencies are generally more secure and harder to manipulate than in the paper money system. So you see, so it is clearly that cryptocurrency have more advantages than fiat or paper money. In cryptocurrencies, transparency on the blockchain, transactions are visible to everyone. That's what it means. Transparency on the blockchain. It means that the transaction which you make is visible to everyone. also makes corruption more difficult. So some countries are now considering using the blockchain in public services. So every countries are adapting this system of cryptocurrency, the digital money. So this is a digital world we're living today. So things are changing. So cryptocurrency in the nearby future is going to eliminate totally the fiat or paper money. Disadvantages of cryptocurrencies compared to fiat money. However, complete digitalization also results in disadvantages for cryptocurrencies. If the internet fails or the user has no access to the global data network, no transaction can be made or forwarded. If the cryptocurrency owner loses his private key, it will be difficult for them to get it back. Cryptocurrencies are more suitable for computer savvy users, and acceptance in traditional trading is currently still low. The past shows that cryptocurrencies are also not protected against attacks from hackers, whereby accounts can be stolen or the system itself attack. So, as a miner in cryptocurrency, you should also be aware that this system is also not protected against attacks or from hackers. So your account can be stolen. So that is why it is preferably that you have a safer place to keep your private keys. Payment errors or transfers to the wrong address will result in the loss of the digital money, as there is no central place for the user to turn to in case of errors. Crypto users should therefore always check the address carefully when making a transfer. So he's trying to tell you that as a cryptocurrency owner, you cannot afford to lose your private keys. You cannot afford to lose your private keys, because if you lose it accidentally, it's going to be very, 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 very bad. So it is better for you to keep these things safer in a place that you will not lose it. So you can see that cryptocurrency have more advantages but lesser disadvantages, more than or unlike the fiat or paper money. In conclusion, cryptocurrencies are still in their infancy and sometimes suffer from scaling issues. Nevertheless, the advantages that cryptocurrencies offer outweigh the disadvantages compared to paper money. So you can see that the advantages that cryptocurrencies offer outweigh the disadvantages compared to paper money. The reason: cryptocurrencies grant access to financial services, and also cryptocurrencies are still in their infancy, like I said earlier, and it also grants access to financial services to billions of people who otherwise do not have a bank account. In particular, in developing countries, nearly 60% of adults are excluded from the banking system because they do not meet the minimum requirements for the account. So you understand, cryptocurrencies grant access to financial services to billions of people who do not have bank account. So particularly in developing countries, nearly 60% of adults are excluded from the banking system because they do not have the minimum requirement for the said accounts. So in addition, cryptocurrencies serve to preserve value exchange in countries with weak currency, for instance, in Venezuela and in Zimbabwe, etc. Cryptocurrencies are also gaining ground among businesses and banks. IBM estimates by the end of 2017, and 50% of banks will be using blockchain technologies as they make financial transactions more effective and cheaper. The investors can, of course, also profit from the possible increase in value of the cryptocurrency. However, it should be noted that cryptocurrencies are very volatile and can fluctuate greatly in price. So, that's all for today. I will see you in my next video. So, thank you for watching. Please remember to subscribe if you love what you've just watched. Please subscribe, share, and comment. And I will also welcome any contribution, to what you think, and maybe on topic that I should, discuss about. So comment down below. I will see you in my next video.